And then all right. So what's up, everyone? Now you can chat. I had to enable the chat there if you're here on Zoom. We are also live at some of our private Facebook communities as well too. But what's up, Andrea? Good to see you. Avery, Chad, what's up here? Andrea, yeah, it gives you the way. Elizabeth is in the house from out in LA there. Deacon, what's up? Haley, Henrietta, good to see you. And we got Phyllis. Joey is here too. Joey, if you want to pop up here, I think, yeah, I added you there as the panelist. Kern, what's up? Hello, hello. Judy, Michael, it's good to see you. You and your partners there. Hey, Joey. So awesome, awesome. So we're going to go ahead. Let's go ahead and officially begin. And again, really excited for this session here that to have Ben Robinson join us. Ben is a subject matter expert on the really in the accounting space. I'll let him share some more about himself, but specifically to the world we're all in, which is e-commerce, most of Amazon. He's been in the space, I know, for more than 20 plus years, expertise as a CPA and everything else. And again, we've had several discussions and meetings. He's also helped a lot of people through kind of the financial piece of the exit process. So he does a lot in that realm, has, a lot of clients, but most importantly, I think myself, Joey and Ben met to talk about kind of where we could bring the most value. I think we're going to do maybe 2 sessions. We may do one a little bit later in the year as well too, but really excited to provide value today for you guys, specific things on either mistakes to avoid, but also some of the things you can take advantage of that can end up putting more money in your pocket. And so, it's interesting because usually people think of accounting and taxes like, not the sexiest topic, but the reality is what I found is this topic is actually one of the most meaningful things, because myself included, sometimes we don't pay enough attention to it. And it's such a huge deal. And I know this for myself, helping people exit brands. Joey, you've been through this process with your own brand as well too. So yeah, with that, let's hand it right over to you, Ben, and myself. Right. And Joey will manage the chat and keep an eye here for you as well.
Awesome. Well, thank you, Joey. And thank you, Jamie, for having me. It's a pleasure to be here. I love sharing knowledge about mistakes that I've seen across my 25 years. You can tell the gray in my head is all because of these mistakes that we're going to talk about today and helping people navigate through them. One thing I want to make sure that I don't do is to yet tell you this is another thing that you need to be doing. And I don't want to say, hey, you're doing all this wrong. I'm here to educate, and I'm here to help you through this process so that you can maximize your profit and also keep your sanity about you when you're going through your finances, because it's a very difficult situation to be in sometimes with our finances. So I want to head things off. So I am a CPA, been doing this since 1998. I'm the co-owner of Keepmetrics. By the way, we're bookkeepers and accountants, so we're nerdy. So this is like part of the official outfit right here, sweater vest, just to make sure that we're dressing the part right there. We work specifically with e-commerce, and today I'm just going to share with you some of the tips, tricks, mistakes, things to avoid that are out there. So are we ready to get going? I can't hear you, Jamie.
Oh, no, all good. Sorry, go ahead, Ben.
Oh, okay, awesome. I didn't know. All right, am I okay to present right here? Am I okay to present, share my screen, Jamie?
Yes, you should be able to. Go for it.
Yeah.
Okay.
But let me, awesome. Let me make sure you can. Sorry, I was on mute there that time. But yeah, go ahead and see if you can. If not, I may sometimes on Zoom, I just got to make you co-host, but see if you're able to, or if you need me to help you there. You got it. Looks like awesome.
All right. Can we see right here? Okay. So there's some traps that are out there as it relates to finances, as you probably are very well aware. I want to bring those to your attention. I also want to give you some best practices for making more money in your business. So it's kind of a 2-part type of thing right here. Now, love to take questions at the end. I emailed Joey earlier. I'm like, you know what? I speak better just from the heart sometimes. She's like, no, you got to have a presentation. So I love doing that. I love speaking about this. So I've got a couple of outcomes that I want to achieve right here today. Number one is for you to be aware of financial traps, but more importantly, how to avoid them, because most of them are pretty simple to avoid. It just takes an awareness and it takes some slight tactics, right? So that's the number one thing that I want to do. Second thing I want to do is for you to learn some best practices to make more money. Okay. Now, why is this important? Why is all this important? Well, the numbers are your business's scoreboard. So imagine that we were playing a football game and there was no scoreboard up there. We wouldn't know how things are doing. So think of your finances like a scoreboard. I love the quote by Marcus Lemonis that says, if you don't know your numbers, you don't know your business. And that is so true. So the numbers are the heart and soul. Most of you probably started your business. I know I did. One of the big reasons was I had really no cap on what I could earn. I didn't have to go to a boss to ask for a raise. And really your finances is directly related to that. You eat what you kill. And so in having our own business, the numbers are so important. If you don't know your numbers, you don't know your business. I love that quote. Mess this up and a business can be shut down. So we're going to talk about some things today that I want to make sure that you are avoiding so that some entity doesn't come out there and shut you down like the IRS or one of the states or Department of Labor and things like that. I'm not here to scare you. Again, I just want to bring things to your attention. And then also, obviously, make more money. That's why this is such an important subject. But I'll tell you this. Let me set the record straight on this. Bookkeeping is boring. Okay, I think, Jamie, you alluded to that. Bookkeeping is boring, but cash is king. And the direct correlation, the businesses that I see are the most successful are those that are invested in their finances, invested in what's going on with the financial health of their money. And we're going to talk about that here today. So cash is king. But what we're going to start off with, I want to talk about some traps for you to avoid. Some of you may hear some of this and go, well, yeah, that's kind of a duh. But I just want to make sure, because sometimes I've made these mistakes myself. And certainly don't want you to have to do that, go through things. I mean, I'm the CPA. I shouldn't be the one that's making these mistakes, but trust me, I sometimes fall prey to them. So let's just admit we're not going to tell anybody else about that. But trap number one, mixing business with personal funds. The fancy term for this is commingling. And this is not something that we want to do. So if you're out there and you started your business recently, I hope that you've gotten yourself to the solution that I'll get to right here, which is to have dedicated bank accounts. Number one, I recommend that you have a checking account just for your business. Number two, I recommend that you have a savings account just for your business. And number three, that you have a credit card that is just for your business. And all of this is in your business's name. Now, why is this important? A couple of reasons. Number one, if you're ever audited by the IRS, which, by the way, I right now am being audited by the IRS. I spent the majority of yesterday preparing for that, producing over 600 pages of documents with another 600 to go. So if the IRS is ever coming and investigating you, not in a criminal way, but just through an audit, they want to see that you're keeping things apart. And we'll talk about this in a minute, talk about tax efficiency. And if you're not doing this, they could actually start busting bubbles, busting entities, and ruining tax situations. So people ask me all the time, they're like, well, okay, Ben, well, how do I pay bills then personally? Well, what you do is that you take money from your checking account or from your savings account in the business, and you transfer it over to your personal bank account, and then you pay the bills. Okay, so depending on how you're set up, that could be an owner's draw, it could be a distribution, it could be a dividend, or it could be through salary. But take the money out of your business. Think of it, if you were working for another corporation, you wouldn't pay your personal bills out of that corporation. So we need to do the same thing with our business. Keep business and personal. Now, an added benefit to this is that you don't have to go and siphon through all the different transactions and say this one was personal and this one was business, especially come tax time and things like that. So do not, please, commingle your funds. Treat this as a business over here. Get these 3 dedicated accounts. Now, I know as somebody who started multiple businesses, I know that savings account in the beginning is laughable. You may only have $10 in there. That's totally fine. Having that account, having it set up so that when you are profitable, making sure that you have these accounts so that you can move forward. So think we address that. And I think we're going to save questions till the end. Is that right? If there are questions and I can answer them, I don't know how you guys do that, but I'm welcome to answer them at any time.
Yeah, either way, Ben, whatever works. So we'll keep an eye on the chat. But if you see the chat, feel free. It's
well,
it's just
I don't have the
whatever's
chat up
most
here.
valuable.
Okay,
Yep.
I don't have the chat up here, so if you guys see something and you want to ask me the question, feel free to break in.
Absolutely.
I like to keep this interactive as much as possible. Okay, so trap number 2, using the cash basis for financial reporting. What the heck does this mean? So there's really 2 ways that we can report your financial statements. Number 1 is called the accrual basis, and number 2 is called the cash basis. I promise this is the most technical things that we're going to get in here today. But let me tell you, cash basis financial reporting is like a fiction, right? It's like reading a story versus reading true history. And a cash basis, you can manipulate your financial statements. I don't use the word manipulate in a negative connotation. I just mean that I can really show a lot more profit this month or a lot more loss this month by using the cash basis. The accrual basis, the big difference there is that number 1, we track who owes us, so accounts receivable. And we also track who we owe through accounts payable. Those are the 2 big differentiating factors. And another thing is that we track our inventory. We put that on our balance sheet. We show it as an asset rather than showing it as a cost of goods sold when we buy the inventory before we actually sell it. So the cash basis, you can still use this. And here's one of the things that I hear a lot of arguments from, even from CPAs. And I'm like, you guys should know better than this. They say, well, you know what? Come tax time, I want to be on the cash basis because it's going to be better for me. That may be true, but here's the deal. You can keep your books on the accrual basis and also report your taxes on the cash basis. There is nothing against that. In fact, it should be commonplace, especially with businesses that are in e-commerce. So do not use the cash basis. Again, use the accrual basis. And I already explained why right there. I should probably stick to my slide presentation right here because it really tells the true story of your business. So imagine that I got an invoice for a vendor and it was significant. Let's say it was $10,000. And I don't report it this month because I didn't actually pay it. I didn't pay it until next month. So I'd report it next month on the cash basis when I actually paid it. That's not what we want to do. We want to do what's called the matching principle, which means we match up all of our expenses in the time frame in which we incurred them. They were there. So the accrual basis is the way to go because it's giving you a complete picture of your financial statements and not giving you some fiction story that is out there. So very important right there. Okay, number 3, late, inaccurate, incomplete, or no financial statements in your business. This, again, is so critical because if you don't know your numbers, you don't really know your business. And having late financial statements, maybe let's say you got just recently your March financial statements from your accountant or you prepared them yourself. Well, there's not a lot of things that you can do to affect the future based upon information that is 5 months old. So having late financial statements is something that I see a lot of. Even worse than that, it's inaccurate financial statements, things that aren't complete, things that report a financial statement that reports inventory is actually cost of goods sold when it's still sitting on your shelves or sitting on Amazon shelves. Having inaccurate information is really a cardinal sin when it comes to this, or incomplete. Going back to my situation where I said, hey, you had this expense, it wasn't recorded in the proper month. Therefore, we have incomplete financial statements. We're not being able to base decisions on reality. Or the last one here is having no financial statements, not having optics into how things are going truly in your business. So the solution is for you to create timely, accurate, complete e-commerce specific financial statements. Now, I underline that because e-commerce is unique, as you all know. There are special accounts, there are special ways of reporting, and general financial statements that most accountants and bookkeepers are preparing these days aren't specific to e-commerce. So we need to have ones, and here's why that's important. Whenever you're going out and measuring your success, when you're coming up with what your metrics are, what are your key performance indicators or KPIs, you need to be able to see specific information on the income statement, on the balance sheet, and on the statement of cash flows that is specific to e-commerce. It also becomes more important when you're benchmarking. Now, benchmarking, what that is, and if you see me getting excited about that, it's because I love benchmarking. It basically says, hey, how are you doing versus the competition? For instance, let's say that we were going to go to the NFL Combine. 40-yard dash. What does everybody ask? Well, how fast did he run it? Right? They want to have some sort of metric. And this is a way for you to measure yourself against yourself as well as your competition. And the big deal there is that it helps you to identify places and areas in which you can make more money in your business. But if we don't have these things right here, if we don't have timely financial statements, if we don't have accurate, if we don't have complete e-commerce specific financial statements, it's very difficult for us to do that. Now, one thing I also want to say in here, I don't know how many of you actually have an accountant or bookkeeper, or you yourself are producing financial statements. But one of the things that I see a lot of is that people go straight to the income statement, also known as the P&L or profit and loss. And they go right to the bottom line and they say, okay, that's the number that I'm going to look at. And they don't look at anything else. So imagine that I went to the doctor and I was sick and she was running some diagnostic tests. And she said, Ben, we're going to run 3 diagnostic tests. And those came back, but only one of them. Okay. She said, well, we're going to make all the decisions based upon just this one report. That's not what I want for my health. And that's not what you want for the financial health of your business. So know this, there are 3 reports that you need to rely upon to make informed decisions in your e-commerce business. Number 1 is the balance sheet. That says all the assets that you have. It shows all the liabilities, people that you owe, loans that you have out there. And then it shows what is left over, right? We've heard of equity in our house. So this is equity on your balance sheet. This is how much is in your business. The second one is the income statement, which people also call the P&L. Okay, the income statement shows all the income that you had, all the cost of goods sold, direct costs that you have, and then all the other expenses, general expenses running your business on there, and it comes to net income. Okay, these are important things. And then third, and a statement that I hardly ever see people get, and to me, it's my favorite. You know, you're a nerd when you like the statement of cash flows best, because this one is really telling you, a lot of times you're like, okay, you're telling me I'm making all this profit. Where the heck is my money? And for e-commerce, a lot of times it's sitting on shelves in your warehouse. It's sitting on Amazon shelves. It's in transit, those things like that. And we really can't know all of these things unless we have a complete picture. We have these 3 reports on our financial statement. So make sure that you have those: the balance sheet, the income statement, and the statement of cash flows. Jamie, did you have something you were going to come in on?
Yeah, just Ben, Angela put a question in the chat here, just said, why is it preferable to pay taxes on a cash basis?
Well, great question. It's not always. It could be advantageous to report it on the accrual basis, but the IRS does not allow you to switch back and forth. So usually there's some regulations that say when you can be cash basis, and most of your businesses are protected underneath that, and when you have to be accrual basis. So larger businesses obviously have to be accrual basis because the IRS wants them to sit there. So if you're cash basis, you can go to accrual, but it's some time to wait to go back to cash basis. But it is not a one size fits all. And when I talk about tax planning here in just a minute, everybody's favorite subject, it is important that you have a unique approach and you look at your situation, because you can have 2 e-commerce sellers, both have $1 million in sales, and their tax situations are totally different. So great question. It's not always that the cash basis is best. It could be best. The reason is that, and I'll get that in just a second, but that's a great question. All right. So let's talk about trap number 4, entity selection for income tax purposes. Now, a lot of people will tell you, hey, you need to be an S corporation. You need to be a limited liability company. You need to be a C corporation. These are different structures for tax purposes, right? Well, unfortunately, this is a it depends question. This is one of the number 1 questions that I get from clients and people that are thinking about starting a business is, what type of entity should I be? And there is no straightforward answer. There's a couple of things we have to think about. Number 1, legal, which I'm certainly not an attorney, don't play one on TV. And then there's also the tax ramifications of it. And then there's also if you're going to have a partnership and things like that. So it's a sliding scale on multiple planes. And we can't say which one is best unless we dig into your unique situation. The one that I'll tell you that I recommend avoiding and I never go with is a sole proprietorship. Why, Ben? Why did I not have a sole proprietorship? Number 1, it provides me with no legal protection. So my personal assets are at risk if I have only a sole proprietorship. There is no separate entity. I am the entity. And I don't recommend that. So what I do recommend is that you have some corporate structure, some entity structure that provides you with legal protection. Again, I'm not an attorney, but I know enough information is that we live in a very litigious society, and I don't want somebody being able to get personal assets. I hope and pray that that never happens to me. But if it does, I want to make sure that I've afforded myself the legal protection. Number 2, I know that for tax purposes, I'm probably going to be paying the highest rates if I am a sole proprietor. Okay, so I don't like that structure, but the other ones that you have available to you, for those of you in the US, is an S corporation, what is called a C corporation, and what is called an LLC, limited liability company. Those are the 3 main things that you have right there. The S corporation and the limited liability company, or LLC, is what are called pass-through entities. That means that the entity itself, your LLC or your S corporation, doesn't typically pay any taxes. All that income comes through to you, and you only pay one layer of it. Now, oppose that to the C corporation, and it pays a corporate level. So Home Depot and all the big corporations out there, they're C corporations. They're paying at the entity level. But not having the right entity is a very important, is a very big mistake that I see. So the solution is to choose the best entity type for your current, and here's what's important, your anticipated financial situation. So this involves meeting with somebody who's knowledgeable about tax, as well as meeting with somebody who's knowledgeable about the law. And if the person that knows the law but doesn't know tax, they need to consult with somebody who's a CPA or somebody that knows taxes, because again, it's a multiple sliding scale, and I can't tell you which one is better. There are pros and cons to all the entity types, and it's important to say, hey, where am I now, and where am I going to go with my business? And I'm ultimately going to sell this business, sell the assets of the business. Then we have to factor that in as well. So make sure that we have the right entity set up. All right. Trap number 5, entity selection for income tax purposes. What did I do? I put that in there twice because it was so doggone important right there. Okay, I think I skipped over right there. Okay, trap number 6 is to think that sales tax and Nexus doesn't apply to your business. Now, Nexus is not a luxury car. Nexus is basically the states getting together, colluding in a legal way, because they're the states and they can do what they want, but making sure that the sales tax, if you're having sales in one state and the other state, it's this web of all the different states and their taxing authorities, okay? So sales tax, thinking that it doesn't apply to your business. Now, this is one of the more complicated things that we have. Fortunately for most Amazon sellers, Amazon's doing all the sales tax stuff. I just want to bring this to your attention, because if you ever start selling on other platforms where you're responsible for that, Shopify, WooCommerce, BigCommerce, having your own platform, then this may apply to you. And there are certain thresholds. And the one thing that I want to keep with you is that you go, hey, you know what? I'm located in Georgia, and I'm starting to sell a lot in Alabama. So I need to probably pay attention to that, because Alabama has a set of rules that says, hey, when you meet this threshold of sales cumulatively over the course of your business, then you're going to have to start charging sales tax in the state of Alabama. So I've given you a resource right here. It's a long URL. If you type in Avalara state guidelines on sales tax, it'll bring this up. This is where I go, okay? So if my clients are getting close to it, we use Avalara. It's a sales tax reporting software, so we use it. So I just go to this to make sure, and by the way, we have a system that's built in where it says, hey, if we're getting close to this threshold, we need to pay attention, because once we reach that threshold, now we have to collect and remit that sales tax to the state every single month or quarter, whatever the situation may be. So know these sales tax thresholds. If you're just selling on Amazon, then it's my experience that Amazon collects all of that. But note that you may have to do that. Trap number 7, not keeping up with receipts. Okay, this is true. I am over here for the last 2 days. I created 2 big binders, 300 pages each, of nothing but the receipts for certain categories of my business. One of my businesses that I have, bookkeepers.com. I have had to produce all of these receipts. Now, here is another trap embedded within this trap, is a lot of people think, for income tax purposes, a bank statement or a credit card statement is okay. That is proof of an expense, and it is not. So in my audit that I'm going through with the IRS, I couldn't just produce the bank statement. I couldn't just give them the credit card statement and highlight, hey, this was to Google for ads. This is legitimate, right? That's all that you need. No, they need the actual receipt, actual invoices from your vendors to prove that. And not keeping up with receipts is a cardinal sin. But the great news is that we have this right here. We have this phone, and we can take pictures of receipts, and we can use an app, something like Dext, okay? Not Dexter, but Dext, D-E-X-T. It used to be called Receipt Bank. And what it enables us to do is have a central repository for all our receipts. I use this. It's helped me tremendously. Like, we probably spent 24 man hours on this audit already. It would be putting a 0 behind that if I didn't have a solution like Dex to help me organize all my receipts. But the key here is to know that your bank statements, your credit card statements, unfortunately, are not substantiation in the eyes of the IRS that this is a legitimate expense. So make sure that you have that. Isn't bookkeeping fun, and taxes and talking about stuff like that? Isn't that why you started your business? I know that it's not, but those are just some of the things. And I've got some other ones here. And if we have time, but I know that I want to make sure that we get over here to the best practices. But Jamie, I'll just say, is there anything, or Joey, anything that I need to address before we move forward to best practices?
Yeah, no, let's keep moving. Really, really good info here.
All right, awesome. Well, we've talked about taxes a lot, but be tax efficient. Okay, be tax efficient. Look, you're going to get to a place in your business where taxes are probably going to be the number one expense that you'll pay. And think about it. If that was the number one expense that you have, even more, most of you, that if you have a good product, even more than your cost of goods sold. So if that's the number one expense, I want to make sure that I optimize that. I want to plan for my taxes. I want to create a strategy that allows me, within the confines of the law and the Internal Revenue regulations, Internal Revenue Service regulations, I want to make sure that I'm creating a plan that lets me pay the legal least amount of taxes possible, not only federally, but also through my state or even states, which is another thing out there, going back to Nexus. So how can we be tax efficient? Well, number one, as I already mentioned, make sure that you set yourself up with the best entity for your situation. And that could change over time, and you may need to change that. That's why it's important that you have people that understand how things are going legally as well as financially, so that they can help you to gauge if it's time for you to make a change right there. Number two, and this is where it comes into cash basis, okay? Deferring income. Now, this is where having cash basis helps, because I can manipulate this in a legal form. All right, there are rules and regulations and laws that apply here, but I can defer income, meaning I'm not going to pay income tax on that until I actually receive the cash. Now, there's a myriad of regulations and stipulations. Every answer when it comes to taxes, it depends, because it does. It depends on a lot of different things right there, but you can defer income. You can also accelerate expenses. So let's say that it's December and you want to pay January's rent this month, then you could actually pay that and deduct it this year and get a tax savings. Now, when you do these two things right now, it's just a temporary delay, but that's what tax savings is mostly. It's pushing the tax bill down the road until you croak, and then you get the estate tax, and hopefully nobody ever pays tax on it. But most tax deductions are not permanent. They're just kicking the can down the road. But if we save $1 today, that dollar in 10 years is going to be worth $2 because of the rising costs. So it helps us in certain situations to do these things right there. And then finally, to be proactive and plan for tax savings. This is a moving target. This is what's called job security for people like me, because the tax code is very complicated and it's always changing. So what is a good tax savings plan today? It could be a really crappy one tomorrow. So it's important to know, hey, what is happening with the tax law? What's happening with the regulations? How can I take advantage of these things? Right now in your business, you may not be where taxes are that important, but trust me, as you grow and as you start to put zeros behind your sales and zeros behind your profit, this is going to be the number one expense, most likely, if not one of the top three. And so it's important that you pay attention to that, because you can significantly, with the right plan, save a lot on taxes. Don't let Uncle Sam and Uncle State get all the money that they need, right? Make sure that you're planning for that. Now, best practice number two, and this could be taken in our personal lives as well as our business life. Beware of death by 1,000 paper cuts, subscriptions. You know what? It's time for me right now, because I'm probably past what I'm going to show you how to do here in just a second, to go and sit down and look at all of my subscriptions. And I'm going to give you a little test right here. So let's talk about how do we eliminate these subscriptions, these death by 1,000 paper cuts. Number one, I recommend that you do an expense review at least twice a year. So what is an expense review? Well, that's where I sit down with my credit card statement, I sit down with my bank statement, and I highlight every single thing that I'm paying on a monthly basis or quarterly basis or annual basis. Okay, I'm going through and I'm highlighting every single thing. Now, you can do this in your financial statements, but I want to take it from the perspective that maybe you don't have them or they're not set up and they're not current. So what we do is we just take those statements and we highlight every single thing that's a recurring payment. So personal life, it could be Netflix. Over here, it might be Klaviyo or something like that for you. It could be Jungle Scout, things like that. Not saying that we should eliminate all those, okay? But we need to eliminate everything unless it does one of these four things right here. First, it makes you money. So the subscription that you have, does it help you make money? These are questions that I ask myself very quickly as I'm going through each one of these lines. Okay, does this app help me make money? No. Well, does it save you money? Because some apps, right, it doesn't matter if it's make you money or save you money, that's more money in your pocket right there. Number three, it relieves some stress. Or number four, it gives you some time back. If it doesn't meet any of this criteria for me personally, I'm getting rid of it. Now, I know sometimes I have a near and dear app that I used once and I keep telling myself I'm going to use it again. Well, guess what? you can always go back and get that subscription again, but you can never get that money back that you're spending every single month. And some people think, well, this one's $10 and this one's $30 and this one's $40. Those things start to add up. And this is really what we're looking for. We're looking for these things to add up, because imagine that you eliminate $250 a month. That's $3,000 a year. That's $30,000 over a decade. And if you continue to do this, and if you continue to evaluate new apps and things that you're thinking about putting in, or new subscription underneath this same thing, it will save you money over time. So some of these things aren't monumental, but they are very important that you do that, and you get in the habit now so that you set the standard for later moving forward. Now, best practice number 3 is to plan ahead for your financial success. Your financial success is not going to just happen. Unless you get lucky, you stumble across a product and now you're just making all the money and you're the only person in the marketplace. The number one differentiator that I see of businesses that are wildly financially successful is that they're proactive in their planning. They're planning ahead for their financial success. They're visioning, knowing what they want, and creating a plan to get there. So here's how you do that, okay? I want you to forecast both your profit and your cash flow, because those two things are separate. As I mentioned before, you may say, I've got all this profit. They're telling me that, but I don't have any cash. Well, that's most likely because it's sitting on shelves. It's sitting on your Amazon, or it's sitting in your warehouse. And so what we need to do is to forecast. This is kind of like a weather forecast, okay, where we're saying tomorrow it's going to be 75 degrees. There's a 30% chance of rain. This is what we think is going to happen. This is like predicting the score of a soccer game. Now, that's forecasting. Budgeting is separate, okay? What we want to do is we want to create a budget, and we want to watch it like a hawk. So if forecasting is the equivalent of saying, hey, I think the score of the game is going to be 14-0, then the budget is the plan to make that happen. Okay, so think about it also from this perspective. A budget, you go to the grocery store, you have a list, and you have an amount in your head that you say, I'm not going to spend any more than $100. That is a budget. Okay, and a forecast is what you think is going to happen right there. And they're both important for you to have. If I had to have one over the other, it would be a forecast to have on there. Now, these are a little bit more advanced. I know a lot of you are just hanging on for dear life every single day, like I am when I start my businesses, but I want you to plant these seeds in your head so that when you get to that point, it's time. And then finally, establish objectives and key results. These are also known as OKRs. I didn't come with this. There's a guy that has a great book out there, Measure What Matters by John Doerr. And it's really, really good on this. This is basically a game plan. Think of it like goals on steroids, as you actually can achieve, because they're very specific. They give you the actions that you need to take. This is the objective. This is what I want to accomplish it. And the KRs, the key results, this is how it's going to happen. But I strongly recommend this book to you. I recommend it to all people that are starting off in their business and all people who want to accomplish things, because this is a great way. I think it was set up by Andy Grove, who was one of the founders of Intel. He came up with this OKR. Google uses it. Google uses it. They've been pretty successful. So it's something that I really, really like to do. Having those embedded in your financials is very, very important right there. So those are some ways. Jamie, I don't know how much time I've got, but I got a few more kind of do's and don'ts that I didn't do slides for that I could tell you, or we can go to questions.
Yeah.
You let me know.
No, let's, you got plenty of time here still.
Okay.
No new questions, but I'm
okay.
sure we'll have a couple at the end here. Yeah.
Yeah, you bet. So quickly, I'll just kind of go through these. Number one, recording deposits as all sales. So we all know that when we sell something on Amazon, Amazon takes a lot of different things, right? They're taking their fees, and they're taking maybe advertising, and they're taking storage, they're taking this, that, and the other. So if you make $1,000 in sales, you may only get $750 in cash from Amazon. But what we need to do is that we need to record all $1,000 of sales and then the expenses, and not net those out. Now, why is important is the same to the bottom line, Ben, right? Well, hypothetically, yes. However, if we're making decisions and we're going to do a budget, then we need to know these things. We're going to be making less informed decisions if we don't break these things out. Now, there's tools that help you to do that, like A2X and Bookkeep, and a lot of them, those are tools that we use. But it's important that we break those out, and not just showing that the deposits are sales. We need to list out all the different expenses so that we can truly evaluate the income side of our business, as well as the cost, as well as the expenses that we have. So don't let that happen to you. Don't use QuickBooks Online to manage your inventory. If you have just a few SKUs, that's okay. But if you have inventory outside of Amazon, and even if you do, QuickBooks Online or QuickBooks, either one, they're not an inventory management system. Okay, so if you start to get inventory on your shelves, will it do it? Yes. Will it screw it up 6 ways to Sunday? Absolutely, it will. You need to use something else like Fishbowl. You may not be at that point, but again, my job is to plant seeds so that if you do get there, you remember, oh yeah, that nerdy accountant guy said that I should go out there and not use QuickBooks Online to manage my inventory because it's not an inventory tool. It's a bookkeeping tool out there. This is a big one right here for me. Don't allow anyone else other than you or a partner, somebody who has equity in the business. Don't ever, not a bookkeeper, not an accountant, not a CFO. Nobody authorizes money to go out of your bank account other than you, other than an owner. If you give that power over to an office manager or to a bookkeeper or to an accountant, that is ripe for potential disaster. Now, 99.9% chance of nothing's going to happen to you, but why put somebody else in the position where they could do that? So it's important that when you're paying bills, even if it's an online bill service, the last button that allows money to fly out of your bank account, you're the only one that can do that. They can do everything up to that point, but make sure that you're not letting anybody else have control of the checkbook, money going out of your account. Don't try to do your bookkeeping on a spreadsheet. That's not the place for it, okay? That's not the tool. I love spreadsheets. I'm not an anti-spreadsheet guy. I love spreadsheets. If I could create a way for my spreadsheet to wash my car, I would. I love them. But it's not a place for bookkeeping. Make sure that you're using something as unsophisticated as FreshBooks or as sophisticated as NetSuite and everything in between. Most of you will probably default to go into QuickBooks Online. It does a good job, right? It's not perfect. No app is, but make sure that you're not using a spreadsheet because it's not going to give you all the information. It's not designed to be a financial statement tool at all. Here's another thing. Don't think of inventory as inventory. Think of inventory as cash on the shelf because that's truly what it needs to convert to. So if you've got $100,000 in inventory at Amazon, that's $100,000 in cash. I want you to picture that not being stuff, not being widgets, not being the things that you sell, but being actual cash that's sitting on the bank account. If we had $100,000 in cash sitting right here or a stack of equipment, we're going to treat that much differently because cash is very liquid and we need to start getting in this mindset that that is exactly what our inventory is. Don't forget to reconcile your bank accounts and your credit card statements. This is just you double checking, making sure that you've reported everything, you've recorded everything, you've categorized everything properly, and that your statements inside of whatever you're using for a bookkeeping application, if it's QuickBooks Online, your records and the bank records agree. And if they don't, which they don't most of the time, there's a reconciliation process to say this is the difference. And it's important that we do that. And finally, don't wait until tax time to start working on your books. No, don't do that. This is something that we need to do all the time. Again, my contention is that this is the language of business. This is the scoreboard. And if we don't know our numbers, we don't truly know our business. So don't be that guy or gal. Make sure that we're doing that. And that, Jamie, is it. Yep. That's all I got. So,
cool. No, we've got a few questions here.
Okay.
Teed up and more are coming in here.
All right.
But let's, I'm going to start with one. Two. How about when you were talking about kind of the all important point of the owners, being the last click in terms of cash, coming out of an account. Any top third-party tools you recommend in terms of managing like bill pay besides just, within the account itself?
Yeah, there's solutions that are out there like Corpay, and then there's bill.com. I'm not a big fan of bill.com. There's
Corpay.
Yeah, Corpay. There's Corpay. There's bill.com. There is Melio. There's a million of them that are out there.
Okay. Which one are you fans of?
We typically are fans of Corpay just because their interface, but we look at things a little bit differently from everybody else. Most of the time, especially when starting off, if you have a good bank, a good business bank, and by the way, if you don't, I don't get anything from them on saying this, but RelayFi, it's RelayFi, RelayFi.com. They're a wonderful bank. We use it for all of our entities. They have it's a bank designed for businesses. I don't even think you can have a personal account there.
So I put it in the so RelayFi.com.
Yep. They're
good to know.
Yeah, and they have a lot of that built into it, and there's no additional charge for it. They have a lot of good working. Your accountant or bookkeeper, if you ever have one or have one now, will love you for that because of the reporting and things like that. So I recommend that, and I don't get paid anything from them for doing that. So wish I did, but I'm not a banker.
But yeah, so Corepay, BillPay.com, and a few others, but you guys like Corepay, and then the RelayFi.com is a cool because for bank as opposed to like we use Bank of America, just traditional, bank for most of our stuff, but always good to know. And how about RelayFi because it has some of the built-in because it's designed for some of this stuff you're saying?
Yep. Yeah, you can do same day ACHs, you can do wires direct through there, you can do traditional checks, electronic payments. There's another service out there called Melio, MELIO.
Let me just spell it right. M-E what?
MELIO. I don't use them personally. I do have some clients and such that use that. But like I said, there's 1,000 of them out there. Just make sure the key on that one is that, hey, you're not allowing anybody else to authorize money to go out of your bank account other than you or somebody who owns equity in your business.
Yep. Awesome. All right, cool. That was me teeing up a question for you, but now there's several others that came in as well.
All right.
Hey, I'll just tee them up to you and read them up for everybody. And again, you guys feel free to keep adding them in here in the chat if you are on one of the social platforms. If you comment there, we'll take a look at it and we'll get it to Ben as well too. But so Avery asked, can you talk about year-end inventory, how to think about and plan for it?
So obviously, if you're with Amazon, you're doing FBA, all the inventory is kept there. But however, I do recommend strongly, and thank you for this question because I didn't even mention it, taking a physical inventory count. Now, obviously, you can't walk into Amazon's warehouse, but keeping an eye on all that. So I'm talking about from a third-party perspective, making sure that I'm doing a physical inventory count. Okay, I'm going out there, I'm looking at shelves, I'm counting every single thing that I have, by product, by SKU, number that I have, and then I'm coming back to my inventory management system that says, hey, I have 8 widgets, and I go out there and count and I only have 7. So I need to update my records to make sure that they match. More important, I need to say, why do I only have 7? I should have 8. So what happened? Did somebody steal one? Did I not record a sale properly? It's a way for you to reconcile amount. So most people don't go about doing this. And if they do, they only do it on an annual basis. Depending on how significant your inventory is, I could recommend that people do this on a monthly basis. I got clients that have millions of dollars worth of inventory. And again, thinking of it like cash sitting on shelves, I'd want to make sure that I was going out there and counting every single dollar that was on that shelf. So that process, if you have inventory that's held outside of FBA, then you need to make sure that you're doing a physical inventory count. We could teach a whole class on doing nothing but that, and nobody would be awake when I got done with that class. I can promise you that.
Ben, how about anything for FBA, just in terms of end of year, just in terms of grabbing the reports sometimes out of Amazon? I know some of the times you got to capture kind of what your year-end stuff, but anything around that?
Yeah, there's no way to do a physical inventory count unless you know some way that you can get into one of the Amazon warehouses and do that. And you'll probably have to get into a number of them to do that. Going and making sure that you go through that same process, that you take their reports, what Amazon says that you have, and comparing it to what you say that you have there. It's the same process. It's not as reliable because you can't go out there with your eyeballs and see things. But without getting into that warehouse, there's really no way for you to do a physical inventory count.
Cool. But yeah, I think Amazon does give you, of course, some reports to grab your year-end totals as well too, which is good. And then Lori says, what if you used a personal credit card for a few startup expenses before you got a business credit card? Can you still capture those expenses? Any other concerns?
Absolutely. That's a very common occurrence. So if that happens, just like if you were working for somebody else, what you want to do is submit an expense report. You submit an expense report. So Excel and Google spreadsheets, they all have a template for it. Doesn't have to be fancy, but just fill in the information. Here was the expenses. This is what it was for. And here are the receipts. And then you can reimburse yourself for that. Or you can just say it's unreimbursed expenses. Check with your tax advisor on that because there are some rules on that. But what I would recommend in that situation is that once you get the cash in your bank account and entity level, submit that expense report and then pay yourself back for it. Very common to do. Just make sure that moving forward that's not done anymore once you have a dedicated credit card. So great question.
Awesome. Yeah, Michael here, and Michael has a couple other talented business partners, and they've been at the business and they've done wholesale and now doing private label as well too. But Michael asked, We currently use Inventory Lab, and it creates a baseline Excel P&L on an accrual basis. We export that and add individual expenses. Do you have any recommendations on software to link Inventory Lab to QuickBooks? And he says, I manually create a balance sheet. However, we'd like to work towards an accounting suite of products to view inventory, margin trends, et cetera. Do you have any other software suggestions for P&L, balance sheet, and cash flow?
I mean, other than QuickBooks Online and NetSuite, those are our two usual culprits right there. I don't know that system that you're talking about right there. I would see that if does Zapier have anything that will connect those? I don't know beyond that what I would use though. That's a common occurrence, right? Where you'll have that third party. Like it does a really good job of managing your inventory, saying that your sales were this. It does a good job at managing, a few lines on the balance sheet, a few lines on the income statement, but the rest of them, it doesn't do a good job at, which is why you're trying to create this on your own. And I applaud you for doing that. The system for doing that, really what we do is we take all that information, we reconcile it, we put it inside QuickBooks Online, and we've added all the other expenses that are on there as well. And that is a semi-manual process. There's some automations that you can build in there to take information from the bank, take information from the credit cards. But at the end of the day, even with AI, even with robotic process automation, there's still some manual stuff that has to go on there. But I don't know any other solution layered on top of that.
Yeah, that makes sense. Yeah, probably Zapier, probably have to kind of customize some Zaps to do something work. And then also in I'll call it disclosure. But so Ben, actually his team does, they do our financials for us too. So obviously Ben has a sizable team that handles all of these things, and hence we're having him on to share. But just besides his expertise, they do actually, of course, do this for a day in, day out for a bunch of us. And that's, again, who we use ourselves.
Oh, thank you.
Yep. So, and on that front, obviously you guys here on Voxer or whatever else, feel free to reach out to me or Ben at the end. Obviously you can reach out directly, no problem. But his info directly. But if so, obviously we're always here to connect you guys, but just reach out directly to Ben in there as well too. A couple more questions here. Let's see. Some good questions coming in here. Andrea asks, does Avalara allow you to add all of your sites like Etsy, Shopify, and WooCommerce sites to determine taxes?
Yes. They have bridges with those so that information can be ported over. And it's a pain to set up the first time, but it's pretty much a set it and forget it. You have to make sure that everything is still going back and forth. But yes, absolutely. They have those interfaces built in. Great question.
Awesome.
Yeah.
Elizabeth says, in regards to leveraging year-end tax write-offs for a vehicle, can you please expand on section 179 versus bonus depreciation? Do you recommend one over the other or use both?
It depends. So again, I'll go back to that. Sometimes it makes sense to take. So for those of you that aren't aware, section 179 is section 179 of the Internal Revenue Code that says that we can expense certain assets that are used in the business that we put in service this year. So the advantage is, kind of going back to my contention, that it's just a timing difference. It allows you to write it all off. So if you have a vehicle that you're using more than 50% for the business, then there's some limitations. There could be some section 179 that you could take, but that's limited to certain types of vehicles with a gross vehicle weight rating. And it also could be that you want to take the special depreciation. What that is it allows you to take an accelerated amount in year one, and then it kind of deteriorates from there. Asking which one is best, sometimes I recommend that we don't take either of those, right? If we've already got enough deductions and we know that next year, I want to stack those deductions for next year. I have a lot of latitude on there. Sorry about the reminder there. We have some latitude on that, and it depends on every situation. So even for a client this year, I may say section 179, and next year I say nothing. And then the next year I say bonus depreciation, but those things change. And so there is no way to say that. We just got to make sure that the vehicle is for the business. It's used more than 50%. And then we can start looking at, hey, how do I make the most of this as a deduction? But without all the facts and circumstances, it's impossible to render that. We've got a whole workflow that's centered around that very question right there in our tax department.
It's awesome. All right. Super helpful. You guys are here. Elizabeth, good question. And you can, it's allowing Ben to geek out a little bit with his expertise. So that's good. Avery did a follow-up because Avery asked the question earlier, read about the year-end inventory planning. And Avery said, I should have been more specific, year-end inventory in terms of COGS. So cost of goods sold, ? And if to think of it as cash, then better to have less inventory at year end.
Yeah. So you're not supposed to write off the inventory until you actually make a sale. Okay. So if I have a widget sitting on the shelf, it's inventory, it's on the balance sheet. I'm not expense it for book purposes or for tax purposes until I actually sell that widget. So we can't just go and write things off. So we have to wait until we actually sell it. What was the second part of that question?
Yeah, you said, think of it as cash, then better to have less inventory at year end.
Yeah. So really, and the reason that you see a lot of these car dealerships and other places that have a lot of inventory, the reason that they do that is because they're going to pay property taxes, if you will, on that, right? And so they try to get that down as much as possible so that the next year they don't have to pay tax on their inventory that they were holding. So that might be something to look at. That's not really directly income tax related. That's more of another type of tax. Yay, more taxes in our business. That's what we need. To look at that to see if that would help us to save some money. That it certainly would there, but from an income tax perspective, typically no.
Awesome. Cool. And guys, you're a couple more really good questions here. Elizabeth is back with another really good question. This one is actually, I think, is important because I touch upon it sometimes. And Avery says, thank you for clarifying. So that's helpful. But Elizabeth says, so if you are launching a second product, so I'm going to assume this question means a second brand, as opposed to just a related product, because it says, how do you recommend keeping the books clean? Do you start new checkings, savings, and start a completely new entity? And Elizabeth says, yes, second brand. So what's your recommendation for Amazon sellers as they, create brands? They have multiple brands in one account or totally separate, all that stuff. Yeah.
If it's a separate entity, then yes, you are required by law to have a separate accounting records for that, bookkeeping records. If it's not, if it's just another brand, what's important is that we're able to differentiate and distinguish between those in the financial statement. So we have clients that have, 10 brands underneath one entity, and we'll take that information in and we'll be able to parse that data and say, in the financial statements, what were my sales of brand one? What were my sales of brand two? What were my sales of brand three? It typically doesn't require a second QuickBooks Online or QuickBooks instance. Sometimes it can if it grows to be a monster and we need to consolidate things like that. But typically, if it's just a separate brand, obviously, different selling account and all that, but we can bring it into the same entity if that's what it's underneath. And as long as you can distinguish those inside of your financial statements, you'll be okay.
Yeah. What I would add to that for Elizabeth here too is, I would recommend putting that in a different Amazon account, the different brand. And again, Ben is more on the expertise. I've seen it just be on the negotiation of the sale that, to Ben's point about the clarity. And so if the brands are kind of commingled, back to Ben's earlier comment, in the same account, sometimes there's work and there's expense to be able to break those out and analyze it. Because let's say you're selling one brand off, right? And so now you can't just move that account. You've got to separate and transfer that brand out of that account. So it's less clean. And I've seen that cost, basically 6 figures plus on a negotiation, because, whenever you're in a negotiation, the person buying your brand, they're going to try to poke holes in your business and negotiate down as much as possible. And that's kind of an easy one, like, oh, it's kind of commingled here. We're not really sure if it's quite as valuable. There's going to be work to move this, et cetera, et cetera. So yeah, I would definitely, in a perfect world, I've seen, separate entities altogether, but definitely I would say separate accounts. I don't know, Ben, Any other thoughts on that?
No, I think you hit the nail on the head right there.
Cool. Yeah, Michael with the the questions about the Zaps. So you I think it will require a plugin such as Zapier. Yep, he says that's helpful. Elizabeth's second brand. So super awesome there. And again, some of you guys are watching on other platforms. So I love this topic because, as we said, people think accounting is not the sexiest, but this always happens when it talks about tax or accounting. We get like some of the best questions because, like Ben, you said at the beginning, this is like, it's real cash and real money, and these are big things to address. So I think super helpful. I captured a couple of those things I put in the comments there, just around a couple of the tools. You also mentioned the expense thing quickly earlier, just to capturing the receipts, because what was that? Dext, right?
Yeah, DEXT, like next, but with a D as in Delta.
Yep. Yeah. That is good, because I always like little hacks and things that are tools that we can all take advantage of as well too. And then and Ben, do you mind sharing just a little bit around, because I know you just kind of provided as much value as possible, and there's not offer, but just in terms of anything about your guys' team and working with people and kind of maybe who should reach out, or maybe at the same time, maybe if people shouldn't reach out for any reason, or other resources, just any kind of guidance. Because I know some of the people, like I said, every tool or people would come on are things that we recommend, or tools that we use, but we actually rely on your team ourselves. So obviously we have a ton of confidence in you, but doesn't mean it's right for everybody. But anything you can share? Yeah,
sure. First of all, we love helping e-commerce people. And so if you have questions centered around accounting, tax, reach out to us at hello@keepmetrics.com. We'll have a conversation with you. We're not going to try to sell you, because we serve a select few clients. However, we also have a network of 116 people that we have trained on how to do e-commerce bookkeeping the right way, that we can always refer to you, if you're looking for some help like that. But we have a real passion, because here's the deal. Most accountants and bookkeepers don't understand e-commerce. And while 90% of it is the same as any other business, that other 10% is very weird, very odd. And it's important that they know how to do that. So we saw that as a vacuum, which is why we created Keepmetrics and why we focus on e-commerce. So not only do we do this, we also take our method and we train that to other people. So I kind of have a network, kind of like what you do right here with AMZ Insiders. We do the same thing with our folks and train them up on best practices, because, as you know, this is a moving target, and what's hip and what's best practice today is worst practice in a month. So we're always keeping up on that. But if you have questions around this, we'd love to just chat with you. Again, don't worry, I'm not going to put you on some autoresponder and market you and all that sort of thing. We're accountants and bookkeepers, right? So that means we're crappy marketers. So most of our business comes by word of mouth, people like Jamie and other clients, or our clients and things like that. But we can help. So if you have questions on this stuff, please reach out to us. We're here to serve you. And if at some point down the road we end up working together, or we end up referring you to somebody, we just believe in doing all that, because I just see the shortage of people who are really qualified to do this.
Awesome. Yeah, really cool, Ben. Really appreciate it. And again, I think we discussed, we may be fortunate to get you back here before of course, it seems like there's a lot of the year left, but as we get closer into Q4 and some of the end of the year stuff, I think we're going to try to convince you to come back and share some more stuff as we get into Q4 as well.
As long as anybody doesn't complain about me being here today. So that would be awesome. I'd love to come back and share, but I appreciate you having me on.
Yeah, awesome. And because you're not seeing the chat yet. Andrea says, thank you, with 3 exclamation marks. Lori, this has been very helpful. Thank you so much, with exclamation marks. So any other thoughts, feel free to put them in the chat there, or questions. And again, we always like to share it. Judy says, yeah, thank you. This was helpful. Chris, thank you as well too. Haley says, much appreciated. Thank you for sharing your knowledge. And again, I know a bunch of you guys are on one of our social media platforms watching this as too. But yeah, I said, I love this too, because I also, I focus on operating so much that at times it's like, it's good to know some of these tips. Yeah, Michael, very solid information. Thank you, exclamation mark. So Awesome. Yeah.
welcome.
Great feedback all around. This will be in for all of you guys in our AMZ Insiders coaching program. This will be in your membership area as well. Ben, any final thoughts? Really appreciate you being here and taking the time with us today.
Final thoughts are know your numbers, know your business, go out there, crush sales. I know busy time for a lot of people is coming up, so I can't wait to share again. Thanks for having me here.
Awesome. We'll leave it at that, everyone, and
All right.
have a great day, a great week.
All right.
Thanks, Ben.
Thank you.
Thanks, everyone.
All right.